think by now, hopefully everyone who's dialing in and joining this session has been able to and listened and participated in some of the other sessions we've had here at the virtual La Jolla conference and understand sort of how we're running this and the discussion board and then the polling. And if anyone heard, as I was talking a minute ago about the polling, we're going to launch 2 polls as part of this discussion panel and get the audience participation and feedback. Maybe what I'll do is launch the first one, and we'll do that sort of at the halfway part mark. We've got an hour for this session, so maybe halfway in I'll launch that poll, and we can talk a little bit about that, and then finish with the other poll, which is a little bit more tongue-in-cheek. So we've got a great session here and a great diversity of views from somebody who ran a national oil company, somebody who has literally written the book on nationalizations and the role of the state in the energy sector. So Marta, that would be you running the national oil company. Francisco, that would be you writing several papers and books on just exactly the role of the state in NOCs. John, who's worked in 2 of the primary markets, Colombia and Mexico, and worked intimately and directly with Pemex and Ecopetrol, but also understands the entire region. And Lucas, I don't know, has Fitch Ratings had anything to do with any of the national oil companies in Latin America?
We rate them all.
Speaking of tongue-in-cheek, and by the way, if you all didn't hear me during the opening today at the kickoff welcome session, I had referenced a one slide, a document that Lucas had sent us, and we posted on the site. It's a reference point that he may draw attention to with some numbers on NOC's performance. I think specifically break-even price and some of the pricing issues. So that's there under panel intros and framing questions. Don't anyone on this panel please click over on the left because you'll shut down your feed and we don't want that to happen. So we have a wonderful panel. Marta, Jara, we appreciate joining us from Montevideo, Francisco Monaldi from Houston, and John Padilla. You're in Colombia today, right, John?
Bogota.
Bogota.
Yes, sir.
Lucas, home base Chicago, right?
Yes.
Excellent. So I want to start with, and we'll ask each of the panelists to give some general thoughts on 2 particular questions. And we've obviously talked a lot about the NOCs in the last 3.5 days. And obviously one of the cross-cutting themes of this entire conference has been the impact or the series of impacts from the oil shock, from COVID-19, and this idea of recovery. What does recovery look like? So let's kick off here with the question of where NOCs in Latin America fit in and how they can support economic recovery in our region and the countries of the region. And then I want to secondarily, and we've sort of divvied up each of you to respond with an eye towards certain NOCs, if you could answer the question of are the NOCs viable as currently constituted in terms of their objectives and goals? So sort of that question of the role in recovery in the broader sense, and then just a little bit about the NOCs themselves and can they actually do that as currently constituted. So let's throw it over. I think what we decided here was to start with Marta, who when did you hand over the reins of ANCAP? It was just a few weeks ago, if I'm not mistaken. So you ran ANCAP until mid-March.
It was late March. That was the emergency started to kick in here in our country. That was the handover time for me.
So you handed over, yeah, you had wonderful timing. Armando Zamora and Rene Ortiz took over, I think it was March 9th and 10th. So they entered as the wave was cresting or building, and you rode the wave and jumped out, and so wonderful. Well, look, Marta, why don't you take that question, and then we'll go to Lucas, John, and Francisco. Over to you, Marta, Jara. Thanks so much. We look forward to your insights.
Certainly. Thank you. I'm really pleased to be able to join here virtually for this discussion. And I guess I can give the perspective of the NOC that's not integrated, the downstream NOC. And the issue here is it's a country that's an oil importer, right? So the COVID and the oil shock affects us in a quite different way. I guess it's Chile, Costa Rica, Paraguay, Uruguay. It's not that many that are non-integrated. And this shock at first glance might seem like, a panacea because it makes for a smaller oil bill, and for our countries it's important. But I guess, we shouldn't be too distracted with that scenario. I think in the short term and in the longer term, it brings quite some risks that we need to be aware of. And the flip side of it, of course, is how do we turn it into an opportunity for a meaningful recovery and for, growing into more resilient energy systems, right? So I guess in the shorter term, the key risk or the key issue is volatility. So I think Chile is more advanced than most in terms of, hedging and governance. And for us in Uruguay, for instance, I think we need to make a much better job in defining objectives and working on the framework because, you need to protect a certain objective. That's risk management is about that. So first you need to start with the first. And it means increasing the capabilities, increasing the governance framework and making that better, but also I think educating the broader audience, the political system. It's not about beating the market. It's not an easy message to convey. It's complex, it's sophisticated, and a lot of work needs to be done there. And I guess there will be short-term opportunities that can be seized from a low price scenario in the situation of a downstream player. But in the long term, you have volatility, but then long term you have cyclicality, right? And we've heard in the different presentations and discussions, what does this mean in terms of a market signal for upstream investors? And if you combine that, the low oil price scenario with other burdens that investors face in terms of SG aspects, social, environmental, and governance aspects, it's another overlay of risk and of difficulty in attracting capital for the fossil business, right? So I think we need to be prepared for a rebound, and the temptation here is to become too opportunistic and forget about the roadmap for an energy transition. These days, I guess all the governments, not only in Latin America, but everywhere in the world, are trying to develop fiscal packages. And as the head of the International Energy Agency says, some of this money needs to be allocated to the development and growth of better energy systems, right? So we need to first make sure we cut all subsidies. Everyone knows low prices is the time to deal with subsidies that are entrenched and very difficult to move away from them. Cut subsidies, invest counter-cyclically. I guess that's an opportunity too, and channel some of these monies that society is throwing into the system for making it stronger. I'm personally a big fan of hydrogen as a bet for the future. I think for this continent, so vast, with lots of freights that need to be moved around, combined with the renewable potential, long haul activities like mining, agriculture. I think that's the challenge ahead, to decarbonize the transport sector. And again, we shouldn't get tempted because we can import cheap diesel. We need to stay the course. And in terms of your second question, which is about how does the NOC from its idiosyncrasy, its tradition adapt going forward, I think COVID-19 and this whole situation has put to the test all organizations, and state-owned enterprises are not the exception. I hope it opens a little bit the window that we can actually adopt new forms, new ways of working, and we need to become more innovative. And here comes the question of governance, right? We know NOCs are a source of cash, a source of power. So it's always difficult to talk about change, but we've seen really firsthand in a very compelling way that, the name of the game is adaptation, right? We need to, if the NOC has any future, it needs to be able to be more nimble, to adapt. We're talking here about very big workforces, very strong workforces, and who count on job stability as part of their terms of employment. It's difficult to think that, you can go into the future and innovate if you have such a rigid organization and structure. So I think there's lots of opportunities, but lots of challenges certainly going ahead.
No, thank you. And I don't know if you were able to hear, but the Vice Minister from Chile talked about green hydrogen and some of the programs and what they were working on. And then we've had a few questions throughout on hydrogen. So that's very interesting. You noted that. Let's move over and invite Lucas. And then we talked a little bit about some of the, perhaps Pemex and YPF and Petrobras, if you could weave that into this first question.
Sure. So I think the answer to both questions is somewhat interrelated. So whenever we talk about the role that the NOCs will play in the economic recovery, it will have an impact on the answer to the second question. But let's go through to the first one. So we think that the NOCs will have to have a limited role in supporting economic recovery coming out of the pandemic. So it is to support these companies' financial well-being. The oil and gas industry, maybe alongside airlines, have been among the hardest hit because of the pandemic. Demand for oil globally is expected to decrease by about 8% in 2020, with the hardest quarter being the second quarter, where demand is expected to have dropped more than 20%. Those are significant numbers for the oil and gas industry. And this is coming in the back of an already oversupplied situation in the industry, with the increase in supply, increase in production from the U.S. So prices is going to take some time for the prices to recover. The surplus that we're seeing today is being stored away, put in inventories, and as the demand recovers, you're going to have a little bit of a lag while the industry consumes the excess inventory. So what we expect for the NOCs and the role in the economic recovery is that, especially in 2021, we should see lower distribution, not only in 2020, but also in 2021. We're going to see lower distributions from the NOCs into the government. We're going to see dividends come down. For Ecopetrol, Petrobras will likely pay lower dividends because those are paid in back of net income. So lower net income, lower dividends for next year. You're going to also see lower royalties. Royalties are a function of prices, so that's also going to take place. So if government wants, if governments in Latin America want the NOCs to play a significant role in economic recovery through transfers to central government, through CAPEX, through preferential prices, whatever you name it, whatever it is, it will put additional pressure on their capital structure, and it will make it, if not harder, for sure more expensive for these companies to attract private capital, as Marta was alluding to. Now, moving to the second question, are these companies viable under the current structure? And the answer is going to be some are, some are not. And this is when I would like to refer to the material I sent, because this illustrates the economics of some of these companies, the per barrel economics for the upstream. So if we look at the four largest NOCs, if we look at Pemex, Petrobras, YPF, let's throw Ecopetrol into the mix just so we can have a reference here. Before the crisis in 2019, both Pemex and YPF had per barrel economics before royalties that were, so the total cost of getting first of all doing the CAPEX that takes to find and develop the oil, then getting it out of the ground, paying administrative expenses, paying interest, all of those costs add up to more than what their products are worth, that the weighted average realization price. So Pemex and YPF, they both have an economic loss, if you will, by producing. And the more they produce, the more economic loss they generate for themselves and for their economies. So Pemex is an issue, and for 2019, for the first time, is the first year when Pemex is reporting higher cost than the realization price, and that's when prices were depressed. So in today's prices, that economic loss is more significant. For YPF, we spoke on Tuesday about the barril criollo and what that means for the company, and I think something we left out in the discussion is the gas. YPF, majority of its production and its revenues come from gas sales, and gas prices have been very depressed and are coming down in the country. The elimination of plant gas that's been going on, the increase it's an interesting dynamic because plant gas significantly increased supply, and that significant increase in supply depressed prices, and at the same time plant gas was dismantled. So YPF's economics have been hurt by the lower price, and their let's say break-even for oil are above 45 today. So even the $45 barrel criollo won't cut it for them. In addition to that, the company has some liquidity constraints, let's say. These measures will maybe help the company have a neutral free cash flow generation for the remainder of the year. So they have about $1 billion of cash on hand. They have about $1 billion maturity coming due in March of next year. They likely won't be able to pay with cash on hand because the company cannot operate without liquidity. So access to capital markets, if that remains closed for CCC companies and for Argentine names, the company will either have to restructure that obligation if it doesn't find alternative sources to the debt capital markets to make that payment. Now, on Petrobras, the situation is a little bit different, and I wanted to throw in Ecopetrol as well, because both companies have done tremendous amount of work over the past 3 years, let's say, to strengthen their capital structure and also to improve their cost position. In the case of Petrobras, the company repaid over the past 3 years $63 billion of debt. These are very big numbers. The company had $126 billion of debt as of the end of 2016. At the end of 2019, they had $63 billion of financial debt. So it's more than $20 billion of debt repayment per year. And they did this while maintaining CapEx, while investing, while growing production. So it's tremendous improvement. We think on a standalone basis, that's an investment grade company today. So it's a much better position to face the downturn in the oil prices. At the same time, the unit economics, and Ecopetrol has done something similar. Total debt to EBITDA as of the end of the year was 1.2 times. So they're coming into the situation with much stronger capital structure that will allow them to access debt capital markets, access financing to get them through this downturn. And they've done so. Petrobras was very quick to respond. They very quickly drew down the lines of credit and bolstered cash position to about $15 billion just to preserve liquidity during the downturn. Now, going back to the unit economics for both companies, and you can find this info on the reference material that Jeremy alluded to. Both companies have break-even, full cycle break-even point for oil of about $35. In the case of Petrobras sells its gas at a price that is above its cost. So it's a different dynamic. Its price for gas in Brazil are maybe twice as much as Argentina or Mexico. So different dynamic for gas. Gas kind of helps them provide some profit and lowers that break-even price for oil. So they should be okay getting through this downturn. And they've been adjusting capex to cope with the new reality or the situation, and liquidity should be okay by year end, when maybe in 2021 we expect prices to start recovering, and we have an assumption for Brent at $45 per barrel in 2021 versus $35 per barrel in 2020. So yeah, should be okay for them, and I think I'll be on the difference between the different NOCs. They're not all the same.
So the reference you just made for Brent, you obviously the Argentine government took that to heart, huh? With the $45 barril criollo price. Thank you, Lucas. I think you've incentivized some questions here that I'll come to. But first, John, some thoughts on those early questions.
Yeah, absolutely. I mean, I think a big topic that this week has brought up is, and in general terms, and for the economy, is this temporary? Is this permanent? We started out with a lot of economists talking about V curve, which is now prohibited, it's banned, and or is it my 5-year-old's L curve, right? So I think the issue that we're in is particularly acute for the energy sector, and the energy sector has got some specific dynamics that I think are going to be very, very prominent for particularly Latin America, emerging markets, and countries that are heavily export driven. So the reality of what we have today is you've got a complete oversupply of the market. We've got storage that just continues to build up, and you're going to have a big overhang here that is going to be very difficult and going to take a lot of time to get through. The reality is that in past cycles, when we've had a dip, that takes some time. This is going to almost certainly take longer. And the question is do we have 10 million barrels per day of excess supply? Do we have 20 million barrels? What's the magic number? Nobody knows, right? So there's a lot of discussion as to how much that is. What we do know is that that's basically signaling that it's going to take quite a while to work through that excess storage. So in the past, what we've had is we've had a situation where underinvestment typically ensues, and then you have some type of price spike, and then that's what keeps everybody happy and moving in the direction in terms of the oil market. That entire framework that we've lived through for multi-decades now could basically be coming to an end. And so that has huge implications for the sector, it has huge implications for the region. And in many respects, I would say the gold rush is over. It's largely over. Now, just like the gold rush, you had, that didn't mean that you stopped making money. There's people that are going to make money, but it requires incredibly more efficient types of activity. And that's going to be very, very instrumental to the region and to NOCs, which gets into the second question. So I think if I would move over to the second question in terms of what's the impact for NOCs on the region, I think you have to start out with some fundamentals. And the fundamentals are that most of the countries in the region have been export-driven markets. And so whether we're talking about oil and gas or whether we're talking about other commodities, like Colombian coffee here, these are markets that are going to take time to build back up. And the dependence on export markets are ones that are going to be, it's going to change the dynamics all around. I mean, all this week we've heard just about every country, understandably so, saying that their production is economic, right? So if everybody's economic, then who's not economic? Just the United States and Canada where they're turning off because of economic reasons? I don't think so. So I think that'll get into the follow-on discussions in terms of the NOCs and what we have there. But for the region, there's a few things that we need to keep in mind. One is that we're seeing, and Lucas knows this incredibly well, is the credit downgrades. So we're seeing credit downgrades across the region, and we're going to see more credit downgrades. So cost of capital is going to go up, and that's going to have big implications on what happens next. Money has been cheap. Money has been very accessible to date, and that has driven a lot of the leverage that you've seen with a lot of these companies, which is simply not going to be an ideal financial structure for companies in the sector. Efficiency is going to be the name of the game, and we can talk about some of those things as we go forward, but it's not going to be business as usual. And so I think particularly for the region, what you've got to take a look at is something that hasn't happened to date, and it's cultivating domestic and regional markets. The models that have been used in Latin America and other parts of emerging markets has been one that has been driven off of exports. And so you have basically bifurcated economies that are driven off of those exports, and the local economy and local service, local activity is really kind of secondary. And so this is also one of the reasons that you've created such disparity, economic disparity, social disparity in a lot of these countries. Going forward, it's going to be very implicitly important to really grow and cultivate that kind of activity. So starting with education, through social, through legal framework, et cetera. It's going to have a big impact. The fact that the NOCs are not going to play the same kind of role in most places, okay, there's exceptions, but that they're not going to play the same kind of role is going to have some fundamental impact.
Super. So Francisco, we purposely, we've said Francisco will answer everything that hasn't been addressed, but also in terms of NOCs. But let me weave something in, or ask you to weave something in, Francisco. I alluded in the opening about how you've written a lot about the sector and the role of the state. And I think about a month and a half ago, you published another paper that was fantastic about the role and what I always call that, we all call the swinging pendulum, right? So let me weave in this question from Pietro that gets into some of what Marta, Lucas, and John talked about in terms of the financial pressures on the NOCs and the governments. And we heard two people yesterday say the Treasury is dry. So weave in that question. Does therefore we hear discussion about privatization? We've heard some rumors or some discussions in Venezuela, for example, about, again, defining privatization, but just in the sense of the term. So over to you to finish our opening session here and weaving in where that leaves perhaps this swinging pendulum from your great perspective.
Great, thank you, Jeremy. So as has been said, these are unprecedented times in terms of, the collapse in demand and the collapse in prices. And so we can expect from previous episodes of price decline, with all the uncertainties, of course, that we have in terms of how long the recovery will take. Let's assume for a moment that it will take a while and we will have a period of depressed prices. If that's the case, then we can expect from previous experience that particularly the countries that the NOCs that were in worse shape to begin with, and the countries that are more dependent on oil, in which the government itself is going to also be in trouble, because you could have potentially a government that is in good health and the NOC that might be in trouble. But if both are in trouble, like the case of Venezuela or Ecuador, then you are more likely to see, like we saw in the past, a bigger role for the private sector, more pragmatism, if you want to call it pragmatism or desperation. But that's what we have seen in the past, that NOCs retrench, they don't have the money. In fact, sometimes they have sort of a double whammy, because they have, on the one hand, have the decline in the price of oil. Sometimes they have a decline in production combined. And then they have governments that are desperate for money, and therefore they might take money out of the company. And of course, if to begin with you have a situation in which the government is in default and the company is in default, like in Venezuela, or is in the brink of default, like in Ecuador or Argentina, that of course makes it even the more harder. So we can expect, at least in the countries that are in this situation, which I include Venezuela, Ecuador, and I think Argentina, that type of behavior. In the NOCs that are in a sort of better shape, and Lucas said it very well, Petrobras and Ecopetrol had restructured very significantly during the low price period of 2014, 2016. And so they are in much better shape. Having said that, this is still pretty tough, for any company. And you have in Colombia relatively high costs of production. So this is going to be a tough time, even for the ones that are going to fare better. And of course, you have three companies of the ones that we're talking about that are listed in the market. We have YPF, we have Ecopetrol, and Petrobras, and they have their prices have collapsed to half or less than half what they were before at the beginning of the year in the market cap, and some of them are a tiny fraction of what they used to be. YPF at its peak was valued at $24 billion, and it reached $1 billion a few weeks back, and now it's about 1.7. Petrobras, reached a maximum in the 2008 of $330 billion, and reached $20 billion in 2016, and now 100, by the way, at the beginning of this year, $100 billion, and now it's at half of that. And Ecopetrol reached 140 at its peak, and it's now at 21 with a decline to about half from the 40 that it had at the beginning. But without a doubt, the companies that are listed in the stock market and have better corporate governance will have also a better capacity to manage these things. And in fact, that's part of the reason why Ecopetrol and Petrobras restructured much more heavily. And finally, I just wanted to mention the case of Pemex, because Mexico is in much better shape than the countries that I mentioned in terms of the fiscal situation. But Pemex, and by the way, Mexico shouldn't be an issue, right? Mexico is almost not a net exporter today. They have become close to the balance of the hydrocarbon balance of payments is negative if you add gas and refined products. So this shouldn't be a big deal for Mexico, right? Because it's a very diversified economy. But the problem is that Pemex is tremendously indebted, is in deep trouble, lost $18 billion last year, 20-something billion dollars in the first quarter. And so the Pemex might drag on the Mexican government down with them, because in particular, the president, contrary to what I just said, that governments become really pragmatic, hasn't shown any signs that he will do it. I think he will eventually do it, but it might be, too late when he starts, using the advantage of having the possibility of doing farm outs and other things. So I'm pretty concerned about what this might mean for Mexico, not because it shouldn't be that serious, with the tools that the government has, but unfortunately, if they don't change course very dramatically, even for Mexico, this is going to be a very big problem. So to sort of round up the idea that NOCs are going to be helpful in the recovery, I think in most cases they are not going to be helpful. They're going to be even a drag to recovery, but that will lead to pragmatism and to opening the sector further to private investment. Of course, it's not an easy time to attract any private investment, as you would imagine, and this is sort of the paradox of Latin America. When you invite them in, they don't want to come. When they want to come, you kick them out, right? But that's the sort of the way the game is played.
That's a fantastic executive summary of your most recent paper. When you invite them in, exactly. Okay. I also, we've all talked, and everyone's talked about shedding value. Thank you so much, Francisco. let me ask you really quickly, and then I want to ask Marta about this question because, you know, she worked at an NOC, and I'd like to see what she thinks about the privatization question. But first, can you offer a comment or two, Francisco, on YPFB?
Well, Bolivia is in a tough position, I have to say. You know, despite the fact that Evo Morales was, compared to other, you know, populist president, pretty pragmatic, and the nationalization of the gas sector in Bolivia was conducted with some rationality. You know, the fact is that there are trends that are very problematic for them. First of all, you know, there hasn't been a significant investment in the sector in the past few years. Then, you know, the two markets, you know, Bolivia is of course landlocked, and moreover, it has a big fight with its neighbor that it should be the one to allow them to you know, to get the gas out and to be a market for their gas, which is Chile, of course. And then Argentina and Brazil. Argentina has discovered massive, you know, Vaca Muerta all these years. Even though right now Vaca Muerta is sort of in a zombie state, you know, you might project that, you know, Bolivian gas will not be that needed in Argentina, except for the very north part. And then you have in Brazil also, you know, the potential for the use of the gas from the pre-salt and the offshore. So I think Bolivia is in a tough spot. I think they definitely are becoming, this is an example, they are becoming much more pragmatic, not only the current administration that wants to attract private investment, but even the candidate of the Evo Morales party is showing signs of a much more pragmatic stance, and they clearly want to get you know, investment both in natural gas and in lithium. So, but the company itself, I think it's going to be in a relatively tough spot. I mean, remember, this is a natural gas company in a landlocked country with the two biggest markets sort of declining. That's a big problem.
Absolutely. The security of demand is something that sounds, from your analysis right there, evaporating, maybe Brazil a little bit still. Marta, and I want to go also to Lucas and John, because we've now gotten a couple times on the discussion board a question of all of these financial metrics and everything we've been talking about here. Okay, so it does not position the NOCs in a strong area for recovery of the country's economies in the post-COVID or during the crisis we have. Does it therefore bring a new wave of investment structures for those NOCs? Maybe not privatization as it was you know, thought of in the past, but what does that mean? All these financial pressures, dry treasuries, reduced capex, and all the kinds of cost of capital. And so, Marta, to start with you, if you were still running ANCAP, what would you do right now in this environment? And then we'll ask John and Lucas.
Yeah, I don't think there's a single answer across the board. I think the key word that has been repeated in the discussion is pragmatism, right? And I feel that more often than not, the discussion goes beside the point. You know, sometimes it's ideology that is driving these trends about privatization or not. In our country now, there's a big discussion in parliament about getting rid of the monopoly of ANCAP. And again, you know, monopoly is just a solution to a market given its scale, for instance, but it's not an objective per se. It's not to say I'm in favor or against it. It's what do I want to achieve and what is the best market design for it. So I think, you know, people like us that are in some way technocrats need to really fuel the debate with evidence, with rationale, with, you know, quality information, so that whatever the decisions that are taken are informed decisions. Every way has its trade-off, right? Pluses and minuses. And I think the states that are going to succeed, especially in an environment like this, are those that are pragmatic, that, you know, can focus on principles, and all the rest, it's a way to getting there.
Yeah, you mentioned, a couple of things we can come back to is sort of resiliency and what I put in one of my thoughts here, striving, not just surviving. So, Lucas, will we see a new, as Marta alluded to, a new debate over how countries either open up or receive investment in their NOCs or their partnership agreement?
Yeah, I agree with Marta that I think there is not one answer for all of them. I mean, when you mentioned about having to define what we mean by privatization, I think that's a very, very key part of the discussion. So if we're to think about privatization from an equity point of view or ownership point of view of the NOCs, then you might have a more standard answer of no, very unlikely. In the case of Mexico, that's a no. In the case of Colombia, there is the ability to float a little bit more equity that the company could get as a capital injection. But at today's prices, I think it's not the time to be discussing whether the company is going to do a capital equity issuance at today's prices, as Francisco was alluded to. I mean, prices have been compared to historically extremely low. So on that part, I think the answer is no. Now, how companies attract private capital, maybe from an operational point of view on an asset-by-asset basis, it's going to depend on the type of business. So one of the key points, I think the most important ones maybe to discuss is in Brazil, Petrobras had this tremendous inertia of privatization or sale of assets, let's call it the divestiture of assets that the company was undergoing, which partially helped achieve this deleveraging that came through, not entirely, but partially came through divestiture of assets. And they were moving towards privatizing, for example, the downstream. Privatizing downstream in these markets is very challenging, I would say, more so from a policy, because of the policy standpoint of view. Whenever you have a government that on and off is intervening prices at the pump, or issuing decrees that limit prices or move prices up or down. For the downstream industry, that's a very challenging scenario because you get pressure from both sides. You get pressure from the cost side of your raw material, the oil, and then if the government comes in and puts regulated prices, then you have to fund that. The tremendous need for working capital that will generate for a downstream business by itself will require an extremely strongly capitalized company, which will make an acquisition of such asset very difficult. In the case of, if we go country by country, in the case of privatizing assets in Mexico, will be challenging when you're privatizing an asset and then turn around and having the country's NOC be your off-taker. So if you're privatizing, let's say, midstream infrastructure in Mexico, that you're going to turn around and contract with Pemex, you are, in essence, doing a lease financing, if you will, for the company, which will translate into, again, very costly multiples. So might not end up being the most attractive financing for the company to do those. I mean, in the case of Colombia, I mean, maybe we heard about YPF when the chairman was talking, when the chairman of the company was talking. He said, this is an oil and gas company, but at the same time, they have investments in renewables. So maybe that's something that they could explore. But in today's Argentine situation, with the specification of energy tariffs for Gencos, and the whole restructure of the country's debt, I mean, again, the timing for privatization might not be the best. So overall, I think that's part of the answer is there'll be a halt in privatization and attracting private capital, because the multiples are going to be significantly hurt for private investors to come into the oil and gas industry, not only today, but for the short term.
No, thank you. And yeah, Guillermo Nielsen has some interesting thoughts about what I would say, and I want to end with, which is a question later for you guys on the energy transition and the national oil companies of Latin America. But John, you're our former banker on the panel. Real quickly, and then I want to do the first poll, but quickly, some thoughts on this question of privatization or financial restructuring, liberalization. Choose your metaphor, your analysis.
Well, I think going back to energy transition is actually a really important point, and some of the initial comments that I made were predicated on the fact that when you take a look at IEA data over the next couple of decades, the amount of energy that's going to be coming from other sources is going to be important. So by definition, companies, whether you're an NOC or a private sector company, they're going to have to pivot. They're going to have to make transition. They're going to have to be very flexible and adapting to the new realities. So when it comes to attracting capital, that's absolutely critical today, as we're seeing in the markets, as we're seeing in the stock prices that Francisco and Lucas were talking about, because how are you? Getting capital today is not the same as getting capital 15 years ago, right? And so the industry in some circles has become kind of the dirty word. It's the new tobacco, as some people have said. And so it's the issue is how are you differentiating yourself, right? Now, when we take a look at Latin America, how many countries will remain investment grade rated over the next 5 years? I mean, who's going to be left standing? That's going to have huge implications on cost of capital and the ability to attract capital. So countries that today are saying, there's no way that we're going to sell any assets. Let's take Mexico as a case in point. Right now, we have a very ideologically driven strategy that is absolutely focused on making Pemex great, making CFE great again, okay? But the reality is what Francisco was talking about is what kind of drain is the resources and the capital that is required to keep those inefficient models functioning. What's the bandwidth of that? How long can people really kind of go? So the contrast to that is that there's tremendous amounts of liquidity out there in the market today. And we've seen it just with the bond issues that Ecopetrol and many others have done. So right now, you're able to get very cheap sources of capital. Once you become sub-investment grade, not so much. The case of Pemex is a case in point. So now what you have is you have such a disparity now that you have a decoupling in the ratings between the sovereign and Pemex, Fitch, as well as Moody's, that it makes, you've essentially shut off the markets for Pemex to access capital. The only way that you're going to be able to do that in an economically viable way is to do it through the sovereign level. Well, if you're doing it at that point, what you have to make decisions as to what it is that you're going to do. The point is that there's going to be a lot of private capital that will certainly be available and interested in select opportunities. There's always going to be gems that publicly traded companies will take a look at. But a large portion of this is likely to come from private capital, where people can come in on an equity basis and employ a very efficient model, whether you're talking about on the upstream side or on the downstream side, to operate and succeed in this kind of environment.
Thank you, and I want to come back and we'll go through with everyone here the role of energy transition. And Marta, I want to come back to hydrogen, but let's do this first. I'm going to ask you guys, and then we'll get the audience results. Which of the following NOCs is most critical to its country's recovery? Petrobras, Ecopetrol, Pemex, PDVSA, or YPF? All right, Marta, which one?
It's a tough one. I think, YPF, I think many placed the hope that it was like a white knight to help Argentina overcome the economic crisis. So I thought initially it's YPF. The problem is that in this oil price scenario, the chances of it have become more difficult.
Okay, one vote for YPF. Francisco,
Well, I mean, if you think about broader about the oil sector itself, of course, Venezuela is the one in which the company might play a big role. But the thing is that it will not be PDVSA in this current shape of form. You know, it's a totally broken company that, you know, it has a debt that is unpayable. So the company itself, in its current incarnation, will not be able to play that role in any scenario. But it will be the country where the oil industry will play the biggest role in the future in the recovery.
Well, and you've tipped the hand on the final question. So, okay, PDVSA, entre comillas. Lucas.
I will agree with Francisco. I mean, when we look at the first four NOCs, from an energy perspective, what they mean for the countries they're fairly similar. I mean, in most cases, in all of these cases, they're the sole supplier of liquid fuels to the country. So if you put it in a relative perspective, these companies cannot have the same role within their own countries. However, given the dependency on Venezuela and Venezuela's economy on oil, relative to everyone else listed here, it'll have to be PDVSA.
Okay, 2 votes for PDVSA. John?
So for the reasons that Francisco says, I would exclude PDVSA because it's not really the entity, and it's not going to be the entity that has any chance of reemerging to play the role that we're talking about here. My answer is YPF, hands down. When you take a look at Argentina's sources of capital and export generating revenues, there's essentially 3 items. So there's the agriculture, there's oil and gas, and then there's textiles. Textiles and agriculture right now are dead. And so the reason that you have the barril criollo is specifically because they know that they've got to somehow stimulate activity. Now, the problem is that you have an official rate and you have an unofficial rate, and whether that is actually providing the level of stimulus necessary for drilling as well as transport, which is a massive issue if you're going to be able to evacuate product, then, you know, those are other big problems that they've got. And hands down, it's YPF in my book.
May I?
Francisco, okay. Opportunity to revise.
I just wanted to comment on the YPF. I agree that it could be, but if the price environment is not good enough, I mean, there is no barril criollo that will get Vaca Muerta going, right? It requires an international price that makes it feasible, and if that's not there, you know, Vaca Muerta is unfortunately dead.
What you heard from the chairman of YPF, pretty explicit in my estimation, they're not buying any oil anytime soon from a third party, right? So, I mean, you know, they've got plenty on hand they'll keep using, right? So, okay, Marta, do you want to stick with YPF?
I do, you know.
Yeah.
They all look difficult, so why not?
All right, everyone, vote, because we're going to push the result right. Wait a second. Hold on. Wrong button. We're going to push the result right now. PDVSA. Okay, so we'll have a great final question that will address everything that Francisco and John and Lucas and Marta alluded to. But for the audience, the perspective of the audience is that PDVSA, and I think you all have cited the reasons if we understand it to be the oil sector more broadly, maybe not PDVSA, and Petrobras, no, excuse me, Pemex pulling second, Petrobras third, and YPF in fourth, and the distant, wait, I'm having a hard time with my colors here. PDVSA, Pemex, Petrobras, Ecopetrol, excuse me, Ecopetrol in fourth with YPF. Sorry, guys, the audience does not really agree with Marta, John, and I guess. I mean,
YPF is the red one?
YPF is yes, I guess it's sort of not a dark red, a lighter red.
Okay, wow.
Apologies to anyone who's colorblind. I might be slightly colorblind here.
I think it's the reverse. I think it's Ecopetrol 5.4 and YPF 16.2.
Yeah.
No?
Yeah. Yeah.
Yeah. So Petrobras and PDVSA are in first. No, look at this. Pemex is, well, people keep voting. Oh, wow, this is interesting. Okay. All right. This is getting too complicated. Apparently, even after I push the results, votes keep getting tabulated, so I'm going to stop right there. I'm not a mathematician. All right, let's go back to our conversation. And here's how I want to finish the conversation, or at least wrap up a little bit. And we started to talk about it, and John, I appreciated the outlines you've given to this. It's the energy transition, and so my question that I want you all to start with or to respond to, and we'll sort of go down the same order here, is given everything we've talked about in this session, but even across the whole day, 4 days of the virtual La Jolla conference, my question is, will these factors or what we've talked about in the last several days accelerate adoption of energy transition trends in the NOCs, right? Will we see an acceleration? For example, Marta alluded to hydrogen. Will we see an acceleration of the perhaps charging infrastructure popping up at the retail points of these NOCs? Just to give a couple examples. So summarizing your thoughts on the potential acceleration of energy transition being adopted as part of a strategic outlook for the region's NOCs. Marta, over to you first.
Yeah, I wish it would. I think, for instance, Uruguay is at the forefront of energy transition as it is. I hope it stays the course, but I realize it's a tough call. I mean, it's difficult for private companies or publicly listed companies like the big IOCs. For NOCs, it's even more difficult, but I think, we need to look at the life cycle of the assets, and it's right now that we need to start, securing those cash flows for abandonment costs, new jobs, etc. There's a lot to be managed through that transition. So it's going to be really a problem if we're not proactive to deal with it at a regional level.
And is hydrogen a feasible? I mean, you see some of the IOCs. I know Shell is putting a big bet. Do you think hydrogen plays a role?
I mean, for power generation, it's okay. But then for transport, electric vehicles are the answer. But battery works for urban, for passenger cars. But what about the long haul? That's where the big volumes are. Machinery, long haul, freight transport. And I think all the experts point to hydrogen as the way to go, fuel cells, right?
Okay. Lucas, over to you. And if you want to mix in some thoughts on the role of gas, which, another heavily debated idea is gas as a transition fuel.
So to your question about the situation accelerating the energy transition, I would say it won't. Actually, it will delay it. When you think about the NOCs and the energy transition, those investments are very, very long-term bets. That's a very long vision for how the energy world is going to look in the future and in the distant future. So in this environment that we're going through, companies will have to prioritize their investments, and they will prioritize their investment very likely, or at least from an economic point of view, they should prioritize them by NPVs and by whatever gets them the most value the sooner, so that they can preserve their cash flow generation and their profitability in the foreseeable future. I don't think it will slow it down. With regards to gas, it's a transition and energy to something else. I think from an economic point of view, if we're going through a downturn in the oil and gas industry and gasoline prices are extremely cheap, I think globally also people are going to take a little bit longer to transition into other fuels. And finally, I'm not an engineer and don't have too much experience with hydrogen and hydrogen cell. One thing I've always thought about hydrogen as a fuel is the pollution. And I don't know if in previous discussion you discussed, when you extract the hydrogen from the hydrocarbon, you end up, creating, I think it's carbon monoxide. You have to do something with those carbons that were left alone when you took the hydrogen out of the hydrocarbon, and that pollutes. So that just isolates the pollution from the consumer, but it's still pollutant. So I don't know if that question has been answered. Hydrogen cells have been around for a long time, and we see them come and go every now and then.
Yeah, I mean, that's probably its own debate. So thank you, Lucas. John, and then we'll wrap up with Francisco and our final poll.
I think I would start out by just saying that bad habits die hard. And if the reality is that most countries have grown accustomed to relatively easy money. And that's going to be a very difficult mindset to kind of change. So when you talk about energy transition, I think that it's very difficult for a lot of countries in the region to kind of get their heads around it and what that means. If you take a look at, there's a UPS graph out there that looks at what the returns on oil and gas have been in the past and what they will be in the near future. They now come in basically on par with renewables and energy transition type of projects. That is going to fundamentally switch how people are thinking about what is profitable and what it is that they're going to be investing in. I think for Latin America, we're really, we talk about natural gas as the energy transition fuel. I think that's probably as good as we can get in the near term. And it's simply because you look at further penetration of electric vehicles. I mean, first of all, what's the percentage of the population in Latin America that's actually going to be in a position to purchase electric vehicles or hybrids? Here in Bogota, I couldn't even tell you where I'd go plug in my vehicle if I wanted to, or how I would contact my utility to put in the charge to have that happen. So then you have renewables, and we've got world-class renewables. Mexico is a case now where you had $9 billion of investment that went in, and you have a government that is saying that because of the pandemic that they need to ensure grid stability. Well, regardless of what the specifics are, it's killing investment, right? And so you're going to kill investment there in the renewable space for some time. Colombia has fantastic renewable resources, but it is, like a lot of other countries here in South America, been very accustomed to cheap hydro. We've had El Niños, and every time we have an El Niño here in Colombia, it's the new great chaotic moment. And we say, as we did in the 1990s when I financed some of the natural gas-fired power plants here in Colombia, that was the solution. And then now we're moving to renewables. Are we going to get to a spot where we're really kind of maximizing and taking advantage of all of those resources that we have? We've got a lot of vested interest in the region, and it's going to come down to political will. That will be the big driver in terms of energy transition in Latin America, in my view.
Political will. I've never heard that before. Francisco, bring us home, man. You've always got all the answers. At least I always look to you for answers.
Unfortunately, I'm probably the most pessimistic here, and I think all of us are a little bit pessimistic about this accelerating the energy transition in some way or another. In the first, the reason is more general. I mean, you have cheaper fossil fuels, of course, and and that makes it sort of less compelling to move to somewhere else. But also NOCs in particular, which is sort of the question, what role they will play. They will be in very bad shape, but they will. I don't think they are unlikely to do investment that move us in terms of the energy transition. Maybe in natural gas in some countries because that's an opportunity. But further to renewables, I think it's going to be unlikely to happen. At least not. The NOCs will not be by any means leading the charge. And finally, about the political will, I'm pretty concerned of what the crisis with the pandemic has shown the world in terms of, how we deal with a world bad, instead of a good. It's a public bad, the virus, and we reacted with very little cooperation. And that's the same thing that for the energy transition, we need massive cooperation in the world. And what we have seen is very little cooperation. And this is a longer term challenge compared to a pandemic. So I think it basically showed showed us at the worst in terms of our capacity to deal with a problem together.
If Roger Tissot is listening, we've talked about the death of multilateralism, some dramatic headline like that, right?
It's a wake-up call.
Yeah, but the point is polarization is deepening, So, okay, this would be the perfect kind of thing we could take over to the cocktails, but we'll have to do that virtually. All right, I think we know the answer to this polling question, so jump on there, everyone online. Here it comes. Let's ask Marta first. The question is, which of the following NOCs may no longer exist in 3 years? Pemex, PDVSA. She didn't even hear the whole list. Francisco, we've already heard your vote.
PDVSA, of course. I think there will be an NOC in Venezuela. Don't get me wrong. I'm pretty sure of that. There is no political will.
I think you've written about that
for not having an NOC, but it might not be PDVSA because of the variety of reasons that we have talked about.
So before I ask Lucas and John, I'll do the famous La Jolla yes or no to put Marta. Since she answered that one so fast, she's back on the spot. Will ANCAP exist in 5 years? Yes or no?
I think so.
Okay, that's a yes. All right, Lucas, do you want the whole list or?
I'll pass on this answer.
That's right. I'm sorry. I promise not to ask you that question. I don't uphold my promises like that. I have too much fun. John?
I'll go with actually YPFB, and it's simple. It's the amount of gas that the associated gas that you're going to have off of all that pre-salt. You need a market, and unless we're gonna say that Vaca Muerta does the Muerta, it dies. There's no place to take that gas, and so today we're in a world environment of excess gas, and it's super cheap. Just take a look at the U.S. and what prices you're exporting LNG at, and that tells you everything you need to know.
All right. Survey says, let's see if my color interpretation is better on this one. So the green, to no one's surprise, is PDVSA with pushing 60%, 56.7% of respondents agree that NOC will be gone. Whether it's a different one that takes its place, sure, that's next year's panel, or maybe 2 years from now's panel. Francisco, you're confirmed for that one, right? And so then pulling up second, and clearly either I need like special reading glasses or Pemex second. Okay.
13%.
Yep, and 10% ANCAP. Well, that was sort of unfair that I threw ANCAP in there, but anyway, so ANCAP people seem to think, they agree about ANCAP and YPFB, John, that those two could be no longer. Of course, this is a very unfair question because it doesn't really distinguish between what shape or outlook or form, that country in terms of an NOC, but I'm asking about these specific NOCs. Virtual applause for everyone on this panel: Marta, Jara, Francisco Monaldi, Lucas Aristizabal, John Padilla. Thank you all so much. Wonderful, wonderful discussion. We're going to have virtual happy hour cocktail nightcap roundtable about the U.S. election and Latin America. Speaking of political will, join us at noon La Jolla time, top of the hour. We'll talk about the election and what it means for Latin America. Thanks, guys. Loved it. This was great.
Thank you.
Thank you.
Bye.
Bye.